Hey, what's going on, everybody? Listen, everybody should have a goal to trying to improve their financial future. One of the best ways of doing so is through investing. Everybody's not going to start a business, but you can buy ownership in these great businesses like the Apples, the Amazons, the Broadcoms, the Nvidias, the Microns. You can hold these businesses in your family for decades, but there's a simple investing wealth formula that goes with it. So we're going to break it down into three parts. The first one we're going to talk about is time. That's the number one component from the investing wealth formula is time. People want to get rich quick. Okay? You might find some people that get lucky and it happens and you're like, oh my God, I'm going to teach you how to do what I did. You can't teach luck, but time is the ultimate aspect of getting rich and creating long-term generational wealth. That should be the ultimate goal. Long-term generational wealth through investing. And it takes time. It takes time, it takes discipline, and it takes consistency. If you get paid once a month, then you should be investing once a month. If you get paid every 2 weeks, then maybe you can invest every 2 weeks. But you have to be consistent. Consistency is the key. You cannot try and time up the market and say, I'm going to invest this month because everything is going up. Oh, the markets are selling off. I'm going to wait. I'm going to sit back. And you don't have to do all this timing and I got to buy the dip. But if you invest consistently every single month into great assets, your money is going to grow. But it takes time. You cannot have a baby in 1 month by getting 9 women pregnant. It takes time. It's going to take time. So everything from a standpoint of building wealth, if you can make it up in your mind, it is going to take time. It is not a process that you should be rushed or that should be rushed. People give up sometimes in the beginning because the process seems like it starts off slow. You're adding, and that's a slow little trek uphill. But eventually, the compounding takes over, and that money begins to skyrocket. That's one of the things that Warren Buffett that made him so great of an investor is the amount of time he invested. 70 years, 80 years he invested. So understanding that it takes time. Time. Don't try and rush the process, but be consistent every single month. But you also have to make sure you're investing in great assets. If you invest in a great asset, you can go to sleep at night. You don't worry about what the stock markets are doing. I don't care what the stock market's doing. I've owned Apple and Amazon for a decade. I don't care what the stock market's doing. I don't care. Ooh, so what? The stock price is down 10%. So what? I'm not selling the business. You got to think about buying ownership in the business, not trading stocks and not sitting around looking at stock prices and think you have to make some move just because the stock price move. All right. So number one, it takes time. Don't try and rush the process. Take time. Buy great assets, and then you can build from there. All right. So time is the first component of the wealth investing and formula. As difficult as some people try to make wealth and building wealth through investing seems as though you got to jump through all these intricate hoops, there are only three components to building wealth through investing. The first one we talked about in part one was time. The second one is what I call the most important number in investing. In fact, I made a video about it called the most important number in investing. And it is your CAGR, your compound annual growth rate. That mixed with time is the single greatest number in terms of investing. It determines the amount of wealth that you're going to have in the future. Okay, I'm going to give you an example. I'm going to use two companies that I talked about earlier, Amazon and Apple. And we're going to talk about those. Now, $30,000 invested in Amazon and Apple back in 2006, January 2006, will be roughly about $3.5 million today. So $30,000 is $15,000 in each, grows to $3.5 million. Why? Because it compounded at 26.2% per year. Now, you take that 26.2% per year and you have to mix it with the time because the time plays a big factor. That's why time and your compound annual growth rate are two of the factors that go together. So you're looking at the time, you're looking at the compound annual growth rate, and you look at how they work together to grow your money. Now, I started buying Apple and Amazon the first time in 2016, June of 2016. Same thing, I invested $30,000. Now, $30,000 invested June 1st, 2016, $15,000 in each, the same amount, or would be roughly around $307,000 today. And it compounded at 25.7% per year. So the compound annual growth rate is almost identical from the last 10 that if I had invested 20 years. The only thing that's missing is the time. You can't go back and add more time. You can't speed up the time, but I can own them for the next decade, which can add up to 20 years. Now, do I know what rate they're going to compound in the future? No, I don't. But if they do compound at the same 25%, then that can show that that same $30,000 I invested 10 years ago in the next 10 years can grow into 3.5 million, the same way that it did over the last 20 years. So the key is compounding at a high rate for a long period of time. Now, question. So that $30,000 that I invested in 2016, June 2016, $15,000 in each. What did I have to do for it to grow into $300,000+? Absolutely nothing. Nothing. But let the money compound. If you buy great businesses, you can let your money compound and it will continue to grow over time. So you got your time and you got your compound annual growth rate. That's part one. Part two, your time and your CAGR. They work together to build the wealth through compounding and through time. So that's two parts of the invest in wealth formula. Time, it takes time, you can't rush it, and your compound annual growth rate, the rate that your money is compounding. That's why it's so important for you to know exactly how much or what rate your money is compounding. If you have somebody managing your money, you should know, they should tell you what rate, not what it did last year. Get out of the mindset of 1 year, what it did in 2025, or what rate it returned in 2024. No, it's about the rate that it compounds over a long period of time. So if your money is compounding at 8%, you're not going to grow into a lot of money. You have to have a higher compound annual growth rate. And you do it by owning great businesses and great assets. All right, so compound annual growth rate and time. And when they mix together, they can create a wonderful combination. Compounding is a great force. The number one force for building wealth over a long period of time. All right, so remember those two, time and your compound annual growth rate. Okay, so the third component of a wealth investing formula is the total amount of dollars that you invest. So you look at the time, you look at the compound annual growth rate, and you look at the total amount of dollars that you invested. So I said earlier that $30,000 invested, $15,000 each in Amazon and Apple in 2006 will be $3.5 million today. If it was $50,000 instead of $30,000, that's $25,000 in each, it would be $5.8 million today, because you invested $20,000 more, but it grew to $2.3 million more. Why? Because of the time mixed with the compound annual growth rate. So you look at that aspect of it. Now the same way with the $30,000. Let's say the $30,000 I invested in 2016. Now, if I invested $50,000 instead of $30,000, it would be $513,000 today. Again, what would I have had to do to grow the $50,000 into $500,000? Absolutely nothing. Absolutely nothing. The work would have been done up front just by identifying the businesses and then investing into these businesses. So $50,000 would have still compounded, just $20,000 more. Same thing. 10 years in 2016, over 10 years, would be almost $200,000 more, or over $200,000 more, just from an extra $20,000. That's the power of compounding when it's mixed with time and also is mixed with your dollars invested. Now, some people say, well, I don't have $30,000. I don't have $50,000. I don't even have $5,000. But do you have $100 a month? Do you have $200 a month? $300 a month? That's the other way that you can do it. If you don't have a lump sum, you can have a specific amount that you are investing every single month, like clockwork. Those dollars will grow on top of itself. So your money will grow on top of itself. Then you add new money, which will grow on top of it. So it's like your money has children, the children have children, and they continue to reproduce over and over and over, and they continue to grow at a substantial rate. So that's very, very important. The dollars are invested. You don't have to have a large amount to start. So if you don't have 15,000 or 20,000 or 30,000, but you say, you know what, I can invest $300 a month. I can invest $500 a month. Whatever you invest, especially if you invested into really, really good businesses and you allow them to compound. So example, another thing too, when you invest consistently, that also increases the rate that your money is compounded. I talked about earlier how investing in 2016, how the money compounded at 25.7% per year. If I invested just $200 a month, that would have increased the compound annual growth rate from 25.7% per year up to 28.9% per year. So you increase the compound annual growth rate by continuing to invest, because stocks go up, stocks go down. So when the stocks are going down, you get to buy, like in 2022, you get to buy shares as the stock prices become depressed, which can add fuel and increase your rate of return over the long term. So remember those three components of the wealth investing formula. It's time, and it's your compound annual growth rate, and it's the dollars invested. Don't try and rush the process. Don't try and get rich quickly, because people who try and get rich quickly end up being broke for longer periods of time. So take your time. Think a decade from now. Every dollar you invest, you should be thinking about a decade from now, not 2 weeks from now. Okay? So think a decade. Think 20 years. Think 30 years. Think well into the future. Think 50 years. Plant these seeds. You don't plant a redwood tree and then expect it to be its full height in 5 years. You don't plant an apple tree and expect it to bear fruit in 1 year. It takes time. So time, consistency, time, dollars invested, compound annual growth rate. Those are the three components to investing. It's a simple formula. The hardest part is you being consistent, you not panicking when stock market or stock prices go down and think you got to jump out or make some moves, but just stay consistent, stay disciplined. Invest consistently every single moment. Every little money that you have, look at trying to invest and buy assets. That's how you're going to change your financial future and your family's financial future. All right? So have a great day, and I'll talk to you soon.